So, hi everyone. I didn't want to do a video about this topic at first because, for the most part, I keep the watches that I buy indefinitely and I don't really worry about their investment potential or secondary market prices or what have you. But frankly speaking, I've seen quite a few videos and also on this topic, and also from people that have quite a bit of reach. And I didn't feel that they covered all the bases. So I thought to myself, doesn't hurt if I'll put out my 2 cents with regards to this topic as well. So here we go. And if you like this video, do me a favor, like it. If you like it, that makes sense. Maybe even consider subscribing to the channel because it really helps, the channel to basically be shown on YouTube. And it doesn't cost you anything, but it keeps me motivated and shows me that people appreciate what I do. It's going to be a longer video. It's going to be split into different sections. First, I'm going to talk about list prices because these prices obviously also influence secondary market prices. Then I'm going to look at the development of secondary market prices in section 2. Section 3 will be basically the drivers behind the secondary market. And then we'll try to look ahead, look into the future, and make an educated guess on where prices are going in the future. Now, a couple housekeeping rules at the beginning. Of course, this is not financial advice. I'm not responsible for any of the data that you're seeing here. The sources I have declared them as good as possible. Double check them to some extent, but I can't guarantee that the prices and everything are correct. So let's start right with the first topic, list prices. You see here a selection of Rolexes, the Submariner, in stainless steel, that's the no date version if you want, the GMT, the Daytona, and you see the Submariner date in 18 carats and also the day date in yellow gold. And these are basically representative for the Rolex lineup, the most relevant watches, I would argue. And you see price developments, list prices from the 1950s up until today. And you see basically they're going in one direction and one direction only, that's upwards. Now, precious metal pieces, they will behave differently because of the gold price, etc. So leave those out. We're only going to look at stainless steel, sub GMT Daytona. Same story here. Of course, they're going upwards or have been going upwards at least in the past. What you can do is you can take those prices and compare them to inflation. And I've used the CPI here as a measure for inflation. And at first sight, you'd think, these prices don't really follow inflation. And they do something completely different. But if you look at the period, let's say roughly prior to the 1980s, this period seems to be a bit different. If you zoom in on that period, you can see again CPI as a measure for inflation. And you can see inflation sits right in between all those prices that have, been going upwards. So you can say basically for the period up until 1980s, Rolex prices were pretty much following inflation. So the question is, what happened then after 1980? So let's talk again about the period before 1980. Back then, Rolex was really a tool watch manufacturer. The watches that they produced were basically high-tech tools, state-of-the-art technology back then. This was before computers existed, and this served a certain purpose. You can see here a vintage ad for Daytona, and it says, "We invented this to track the speed of a 7-liter sports car, good old days." And you can see the Submariner was invented, of course, to go diving. So these were true tool watches. And after the 1980s, roughly, this wasn't overnight, but Rolex repositioned themselves. They repositioned their brand from a tool watch brand, for the most part, into a luxury brand, or maybe even a jewelry brand. Why did they do so? Well, because of the quartz crisis, right? And this repositioning is probably the single most genius marketing move to be ever done in the watch industry. And of course, Rolex wasn't the only brand that did it. If you look at AP, look at Patek, all of those guys, AP launched the Royal Oak in 1972. This was the first luxury steel sports watch. Prior to that, no one would pay the amount of money for a steel watch. Patek followed in 76 with the Nautilus. So really, genius marketing move, because from a rational perspective, those watches became completely obsolete for timekeeping, right? So they repositioned those watches, and this is why prices went in a completely different direction. At least it's part of the story. Now, fast forward to 2004 up until today, you can see at first at this chart that, prior to, let's say, 2021, Rolex prices were rising quite aggressively despite no or very low levels of inflation. And at the same time, you can see that after, let's say, 2021, that's the highlighted part here on the right side, you see inflation enters the market again. And, when that happens, you can see that the slope of Rolex prices got steeper as inflation entered and basically followed inflation somewhat. So now, of course, Rolex prices, list prices going forward, what will happen? They can't continue to rise like that forever. The same sort of slope, right? But they will be probably upward sloping, and they can't go to the extremes, but unless there will be like an endless supply of cheap money. But that's a different story, and a bit more on that later. So long story short, simple takeaway: historically speaking, list prices have always increased. However, do not rely on inflation as the only guide for where prices are going, but rather think of inflation as a price floor, and Rolex prices will rise at least at the rate of inflation, but likely more so, at least to some extent. Now, talking about secondary market prices, and I've used data from Chrono24. I know those prices are inflated, it's not watch charts, but if those prices are continuously inflated, they still serve as a good proxy of where the market is going. You have a lot of data points. Yes, they might be not as fast to come down again, but we'll look at the same data source over the whole time period, so it's going to be fine for the purpose that I'm trying to achieve with this right here. So I'm using Chrono24. I picked two watches. I picked the Submariner date, the 116610, and the successor model, the 126610, basically as a lower beta proxy for current production 6-digit Rolexes. I didn't pick the date model because I like it. I prefer the Submariner. But there are a lot more listings out there. This is basically the bread and butter Rolex watch besides the Datejust, but there are way too many variations of the Datejust. So this is probably the Rolex watch, probably the most copied watch in the industry, and it's basically lower beta proxy, so to say. The second watch that I chose was the 116500LN white dial, so the current production Daytona, which basically serves as a higher beta proxy for current production Rolexes, so the hype watches if you want, right? So we start out with the 116610, and very simply put, we have this graph here from 2010 to 2023 because this is really the data that we have. But simply put, secondary market prices, there still are two distinct eras of the secondary market during which the whole dynamics completely changed. There's the pre-2017 era, and then there's the post-2017 era up until today. Now, pre-2017, you would buy a used Rolex or a new unworn Rolex on the secondary market because you could get it cheaper than at the AD. The AD would, for some models more, for others less, even offer discounts on Rolexes, but still in most cases you would find a better deal on the secondary market. Now, it's very hard to find reliable data for this time period, as the whole market wasn't really as institutionalized as it is today. Even I think Chrono was launched in the early 2000s, but they didn't have the same database and not the same number of data points as they do today. So you have to take my word on this, but basically prior to 2017, completely different story. Now, this is the watch, that's the 116610, and again, if you look at the price, it really started to kick in, really go crazy after 2017, right? And you can see the watch hit its all-time high in May of 2022 with around about 16.6K. These are average prices from Chrono24. Now, if we compare to that, the current production, the successor, the 126610, you can see this is the watch, and this one peaked a bit earlier in March, not in May. Why is that the case? Because the predecessor, the 116610, people anticipated that this would be replaced and basically discontinued. And so do you see this in the highlighted area here? Prices went up. And so when basically the prices of the current production model went down, this one was still more stable. And so it didn't take quite a bit of a hit as the model that's still in production. And here again, that's the era that I just mentioned. This is really when things started to go crazy. And, of course, 2017 is when everything started. And, it got more intense after a few years after 2017. And you see that here very good with the Daytona current production, with the white dial. That's the watch. Now, this watch was released in 2016, and it follows a bit of a different pattern because that's the exception to the rule. That's the ultimate Rolex hype watch. Because even in 2017, and this watch peaked also at the same time in March 2022, but ever since the beginning, this watch was trading at almost 1.5 times retail. And what's really crazy, and that's what I said just a couple seconds ago, the real craziness started kicking in, once, the flu hit in 2020. We all know what I mean, but I can't really say it because of YouTube's algo. And people are now talking about a bubble bursting. And, well, there was certainly craziness involved, and this was not, and is probably still not a very sustainable market. But you can see that watches prices have come down quite significantly, but this watch is still trading at more than 2 times retail. So this is not a bubble popping or a complete meltdown, rather, right? Bubble might be popping to some extent, but it's not a meltdown. Now, this is basically the state of the secondary market that I just showed you, right? So if we go back for a second, crazy period, I flip back here, crazy period ever since 2017, and it got super crazy, let's say, after 2020. And then we saw some coming down, cool off, but still elevated levels for most watches here. Now, what are the drivers? Number one driver is going to be ultra loose monetary policy, is what I call it at least. So what do you see here? You see here the Fed funds rate. So that's basically the interest rate level in the US. You see it from 2000 up until 2022. And there's different data out there. Some say 4.6, 4.7, others say 5.2, 5.3. And they use this number as the average long-term interest rate level. Let's stick with this one right here. I think around about 5.2, 5.3%. So basically, in other words, everything that's lower than that is cheap money. And because the interest rates are really the price, they dictate, they're basically an indication for the price of money. And you see that after the GFC, interest rates came down significantly. And unlike before, if you look on the left side, after the dot-com bubble burst, interest rates came down, but they snapped back quite quickly. And you can see since 2008, they stayed low for a very long time, only started to increase at the end of 2015. And then because of, again, 2020, they went all the way down again. And now we're going up, but we're still below the long-term average interest rate level. What does this mean and why is this relevant? Because basically, people said, we had low interest rates and no inflation. Well, we had asset price inflation. You can see that here with the S&P, one of the most important indices, and Bitcoin. And if you look at the price development of those two risky assets since 2017, since the watch market started to go crazy, you can see the S&P multiplied by 1.7 times and Bitcoin multiplied by more than 20 times. So people made a whole lot of money since that time. And if they were holding for longer, obviously they made even more. But just starting in 2017 as an indication here. And people have to do something with that money, I guess. And what did they do? Now, if you compare the Daytona index versus S&P versus Bitcoin, the Daytona is the light blue line. You see it's pretty much in between the two as what I said before, a higher octane Rolex proxy. And the Submariner date is a bit less spicy, so to say, but you see the correlation, right? So they behave like risky assets. You could say it's a real asset. It's a sort of investment. We'll talk more about this later. So the second factor behind secondary market prices, the exponential change or exponential increase in social media adoption, meaning a lot more people use social media, and a shift in the usage of social media, meaning people use social media differently. You can see here the monthly active users, or MAU, for Instagram since 2011. And if you look at it, the first 6 years, they've added 650 million users. And again, taking that 2017 cut up until today, they added 1.5 billion users. So less than 6 years, so only 5 years, but they've added more than twice the amount that they added in the previous 6 years. So a lot more people are using Instagram. Now, how did Instagram look like in 2011? This is the Instagram profile of Snoop Dogg. Everyone who would have an Instagram profile like this today, probably wouldn't have any followers at all because it's just straight up boring, I guess, besides the picture with Zuckerberg there. This is the ABC World News Instagram channel in 2011. Also not really state of the art. Back then, you could basically upload a picture of a funny looking coffee and people would go nuts. Now today things are a bit differently. And I would say there are two things. Number one, people have to show off. They have to show off what they do, and they do it in a very sophisticated manner. But at the same time, they're not very creative. If someone shows off something, you have to basically do the same thing. You don't believe me? Look at this. Same place. Well, different people, I guess, with pros and cons, slightly different variations, but it's the same thing. Different variations. And yeah, of course, I'll let you look at this for a second here so you're not falling asleep. Very interesting indeed. So basically people are doing the same thing here. And, it's not just women that do this, it's also men. And I mean, this guy here, I'm not sure if he's working out. If he does, it's probably 100% natural. But he clearly needs a Hulk, right? And he needs to show off that he's there as well as everyone else that I just shown you. And what I also want to tell you is that this is a global phenomenon. It doesn't only happen in the Middle East. This is Switzerland. And, this is it. Same. High levels of creativity. I mean, I don't see any pattern here. I don't know if you do. Very creative poses. Never seen that before. And yeah, it's not just women. I mean, I don't know if this, let's call him guy, identifies as a man or not. It doesn't look like a woman to me. But yeah, everyone's doing it. You can do it in the outside. You can do it in the inside. And I had to take a closer look. I thought I screenshotted the same thing twice, but that's not the same person. These are two different people. And yeah, you see different seasons, or I don't know. But yeah, it's not the same person. So again, high level of creativity here. So, but why am I showing you all of this? This is highly relevant. Yeah, it goes on. The creativity is crazy. But I'm showing you this because it has an impact on our hobby, watches. If you like watches, then your explore page, I think is what Instagram calls it, it's probably going to look something like this now. This is not 100%, statistically representative picture of my interests, but, it could be more off. So, so this is how Instagram looks like if you like watches. You see famous, probably not so important people that wear watches and what sort of watches they wear. You see famous people that are more important, indeed, yes. Vintage Daytonas, FP Journes is what they're wearing. You see more important people, and you see, important people that really spark hypes here. That's a different story. And yeah, I see more people that are, known and more or less relevant. And then you see stuff like this, right? And again, talking about flex culture, and everyone has to basically have the same thing, or this is the thing you need to have, and person X has it, so I have to have it as well. And then you see stuff like this, videos, your money is safe in Rolex. Yeah, that's really the thing we need, I guess. Now, the third factor behind secondary market prices are speculators. Because, besides part of the reason why some people bought Rolexes always, one of the reasons always was that they hold their value, right? The store of value. But the increase in the total number of people buying watches, because of the reasons I've shown you before, because of Instagram, created this demand overhang, which in it by itself made things worse. Now, what I'm trying to say with that, a bit more simply put, while every 18-year-old suddenly thought he truly likes watches and, he needs to show them off on Instagram, That basically created a demand overhang, which led to prices going up. And basically, the people that really liked watches, they always bought them. The ones that somewhat liked watches started flipping them because could make a quick buck. And then suddenly, even the guys that didn't want to flex and couldn't care less about watches, they saw that their buddy was walking out the AD with a Submariner and was selling it the same day and made 2K out of it. And they had zero interest in it, and they entered the market as well. And so I'm showing you here the Submariner date, current production model on the left, previous ceramic in the middle, and the pre-ceramic version on the right. Funny enough, the two ceramics have the exact same number of results on chrono. Now, you can see those watches were in production for different time periods. The one on the left since 2020, the 2019 is probably a glitch. The one in the middle, I think, since 2007. And the other one, you can scroll down, goes back to 1989. And you can see the number of listings and how many of those are new unworn. Yes, there's also an additional filter that you could set if it's really new or unworn, but I ignored that. So what I wanted to do is I wanted to give an indication of how speculative a market is. And I proudly present to you the Watch Your Speculative Indicator, or WSA for short. Now, how is this complex formula put together? Very simply, you take the number of new unworn listings and you divide it by the total number of listings. And of course, that factor is going to range between 0 and 1. And 1 would basically indicate a market which is purely speculative, because all the watches that are for sale are basically new unworn. And a 0 would basically mean you have no speculative market activity at all. And now here you go. You see the WSA ratios for the three watches. And what's very interesting, now of course you have to adjust this. This is just a simple indication. What I want to add to this as well is 6-digit Rolexes, those are the ones that are currently in production. They behave differently than the 5-digit ones, and these ones behave again differently than the 4-digit ones. Because watch collecting really started in the 80s. The reason why a 6263 unworn Daytona goes for $500,000 is not only because it was produced 50 or 60 years ago, but because people were treating those watches differently back then. Remember, there were two watches. So not many people babied them or put them in the safe and didn't touch them, right? So this has an implication. So you would have to adjust for the age of the watch as well, but the different usage between 4, 5, and 6-digit Rolexes. But I think already when the 5-digit Rolexes were rolled out, people were starting to collect. But 6 digits is a completely different story, because the internet was there, completely arrived, and not just with forums, but then also with social media, as I just said. But what's really interesting, you look at the current production one on the left, which was introduced in 2020. So when the hype was already there, the watch market was already crazy. You got a ratio of 0.6 roughly. The one prior to that in the middle has a ratio of approximately 0.2. That watch was in production since 2007. So 10 years, over 10-year time period, you can see that here. This watch was sold before these watches were going over retail. And this shows why way more of those watches weren't hoarded, but actually just worn. And you can see basically what I'm trying to say here, the 0.6 shows to me that with this watch, there's a lot of speculative activity going on, or a lot of people that buy this watch are also speculating on this, and they're treating this watch as a real asset and purely as an investment. Now, the fourth factor, which is going to basically influence secondary market prices, is the ever-growing watch community. Now, the thing is, on the one hand, you had more and more people that basically got into the hobby because of, again, the rise of the internet and social media and flex culture. And you can see that here. And, yes, I'm aware I have the same guy here twice, but really, is this how the typical Patek consumer looks like, client? I don't know. These guys here, for some people, were the exact reason why they were basically interested in watches. They were looking for a hobby to get as far away as possible from these people here. Look at this guy on the upper right. How I tricked the authorized dealer into selling me a Rolex. This guy here. I mean, this looks like pure Einstein, high IQ sort of guy, right? And then 2023 Rolex releases unveiling the newest Rolex models. Oh no, wait, it's just a prediction. And then the one in the middle, I'm finally revealing my entire watch collection. Actually, well, okay, no, there's one thing. I wanted to say there's nothing that interests me less than her watch collection, but there's probably one thing. If she came out and said, I'll open up an OnlyFans account, that's probably the only thing that's less interesting to me than her watch collection. But what I wanted to say, way more people are in the watch community, number one, and number two, the number of people that own more than one watch. You can see on the upper left, my favorite German guy, after 2 years, he has a watch collection of 140K. So the number of people that own more than one watch today is way higher than it used to be. So the quote unquote collectors, or rather wannabe collectors, connoisseurs, they have basically that number has gone through the roof. And to make a case in point, apparently in the past when you gave your watch to Patek to service it, they gave you a replacement watch because this was likely the only watch that you had. And we're talking Patek here, right? So a true luxury watch with the according client base, and not the simple Rolex client where could have maybe expected this. But no, this was Patek. So a lot more people buying watches and a lot more people buying more than one watch. Now, additional factors that are driving secondary market prices. Number one, the ever-increasing list prices. I spoke about this before. Basically, in the long run, those list prices, they only went into one direction, and that's upwards. And of course, those list prices, they don't serve as a hard floor for secondary market prices, but they act at least as a sort of support level or anchoring point for secondary market prices. And if you look at secondary market prices through that lens, you could expect them to also have a continuous upward drift over the long run, at least at the rate of inflation. And that's not to say that secondary market prices for Rolex can never fall below list price again. Of course they can. But I'll give you an example. Let's say a model continuously trades 10% below list, and then the list price is being increased. This is likely to have an effect on the secondary market as well. So that's that. Number two, the discontinuation of models. Now that's pretty self-explanatory. If a model is no longer produced, then supply is automatically limited. In addition to that, this can also attract additional buyers because they want to get that model before it completely disappears from the market. And number three is what I call spiraling or knock-on effects. Now I talked about various effects, and those effects in and by themselves are at play, but they're also combined and intertwined. So I'll give you an example. I said before, some people were always interested in watches and buying them. Then social media, let's say, attracted more buyers. And this basically increased prices. Some of those buyers started to buy more watches and flip one or two watches. These increased prices even further, which again attracted speculators, which increased prices even higher, or even pushed them up even further, which again attracted more speculators. So what I'm saying, these effects can have sort of butterfly effects and have to be looked at in combination. Now, where do we go from here? Looking into the future. Now, of course, I don't know what will happen. I don't have the crystal ball. If I knew what would be happening, then I would probably not be doing this video. Maybe I would be doing it sitting on a yacht somewhere in the French Riviera. No, but all I can do is I can formulate an educated guess, and I can name some of the factors that will be relevant going forward. Now, not surprisingly, some of the factors were relevant in the past and they will continue to be relevant in the future. Starting off with interest rates and monetary policy. A lot of people, they start with risky assets, but I think the first thing that matters is really interest rates, monetary policy. This is part of what dictates risky assets, so equities, Bitcoin, etc. Number two is, of course, the state of the economy. Simply put, if the economy goes up, more people have money, more people buy Rolexes, prices go up. Again, those two things, again, are intertwined, the first and the second bullet point, and they together dictate the pricing of risky assets. A lot of people, again, they talk about Bitcoin as a good indicator for Rolex prices, but that doesn't really make too much sense. Let's say Bitcoin will go to zero, and not because the whole financial system breaks down, just because there's an issue with crypto. The Daytona, of course, wouldn't go down to zero, right? So it's too simplistic to only look at risky assets, and particularly to only look at crypto assets. So the economy is important, interest rates are important, risky assets are important. And speaking about the economy, a looming recession, right? Some people argue we are already in a recession, because they look at the textbook definition and they say, a recession is basically 2 consecutive quarters of negative GDP growth. I don't think we are in a true recession right now. A true recession is when you feel it in the unemployment rate, when the unemployment rate moves away from the all-time low or close to all-time lows that we are right now. When you see a widespread layoff of people, you've seen some people being laid off now in the tech sector, but we're far from a true full-blown recession. When people start to lose their jobs, they can't pay their mortgages anymore, they're basically scrambling for money. Now, I don't know whether it's going to be full-blown recession. It's probably not going to be the exact same copy-paste thing as in the past. People say the four most expensive words are this time it's different. So it's really hard to basically forecast these things. But this is, of course, something that's going to have an effect on it. Now, I talked about the increasing list prices before, and inflation, which is also intertwined with the economy and interest rates, of course. No need to talk about this again. Now, more importantly, maybe supply versus demand, or a supply overhang versus a demand overhang. Now, maybe let's start with the supply side first. Production capacity and artificial scarcity, right? So to be clear, the last, 5-6 years or so have not been a result of Rolex artificially limiting supply, as so many guys on YouTube or watch experts conspire it to be. It's rather really, in my opinion, Rolex or their production facilities were running at full capacity. Now, of course, there were periods, before in the past where Rolex was limiting supply and artificially limiting supply. And also Rolex was willing to buy back stock when there was an oversupply. There are even clauses in agreements that Rolex has with ADs that, let's say a dealer goes bankrupt, then Rolex has the right of first refusal to basically buy back the stock. And Rolex is thinking very, very, very long term, and their number one priority is to protect their brand. So what they want to avoid at all costs is an oversupply. So they're very cautious about this, because once this happens, and the brand loses attractiveness, and the watches are not, basically, they don't keep their value as much as they did, this is going to pretty much destroy the brand to a large extent. So they're very mindful of that, okay? So that's that topic. Now, demand breakdown, looking at the demand side of thing. I said before, there are many new people that have entered the market. And the question really is, who entered the market at what time and for what reason? That hints a bit at those spiraling knock-on effects that I mentioned before. Let's start with the speculators, right? Because these guys, they will automatically become less and less the closer we get to retail prices, which will first be felt probably for precious metal pieces. Number one, because they have a higher price tag, and for that reason they are less attractive from a return on equity perspective, so to say, because you have to put up more money for a lower and riskier return. And number two, these were also the models that were amongst the last ones to go or to be basically sold above retail, driven by ridiculous prices for their solid steel counterparts that basically reach precious metal territory. So looking at the steel Daytona, that watch went even higher, was selling for even more than the MSRP of the precious metal Daytona. And this basically then had a knock-on effect on the precious metal piece, and people started second guessing whether they should spend that much money on a steel piece or they should rather just go for the precious metal version of it. So these will likely also be the first ones to come down. And so the precious metal pieces and also the speculators, they will disappear once there's no more money to be made. Now, as long as you can make money, they will stay. Whether you can make 10K or 5K off of a steel Daytona, they will still stay on the wait list and they will want to buy those watches. Now, talking about different people entering the market at different times. collectors, the guys that are more, let's say, intrinsically motivated, but maybe also the guys, and I said there are way, way more people now than 10 years ago that own more than one watch. And especially the guys that built the collection within 2 years. They maybe will, at some point reflect on their collection, and basically second guess whether they really need all those watches that they have, or maybe they could even be just happy with one or two pieces. Maybe they also get scared because the prices are coming down. They don't see it as an investment anymore. It could be that they have those thoughts for pure idiosyncratic reasons, right? Because again, they feel like one or two watches is enough, or maybe again it's intertwined with the state of the economy, them losing the job, having some sort of a squeeze, liquidity squeeze, needing money. So everything or a lot of things are, can be thought of. But the point is, what I want to make with the supply-demand situation here is, even if some of those buyers, holders of those watches will disappear, right? I don't think it will go all the way down, because you can't really put the social media genie back into the bottle, meaning the overall number of buyers will be higher than pre-2017 before this craziness started, right? And as long as Rolex production will not drastically exceed demand, this will prevent prices from falling all the way down and causing quote unquote a real market meltdown, which would be not just the end for some collectors, but as I said before, for Rolex as a brand as well. And as such, it's not surprising that Rolex, again, has proven in the past that they know how to artificially limit supply and are willing to do so. And that's just in a worst case scenario, provided that there are no production constraints, which naturally limit production. So this is also something to be mindful about. What else? New societal trends, right? Right now we have the flex culture. Who are we to know or to say that not tomorrow there might be a different trend, a new minimalist trend, where people are anti-materialistic and they get rid of everything except the bare minimum. Societal trends can be quite extreme, and they basically average down the road. They basically go back to the average as the mean reversion thing, but at times they can be quite extreme as well. And so where does this all leave us? It really depends. It depends on the model. I showed that indicator before, where I wanted to measure how much speculation is taking place within a given model. And generally speaking, the higher the speculative aspect of it, the higher the risk that prices will collapse or come down. Now, the question overall really is, back to what level will those prices come? I don't think we'll see a pre-2017 price level anytime soon. Now, of course, somewhat adjusted for the recent price increases as well, meaning looking at the relative premium over list prices. So the question really is, where will we end up as 2018, 2019, 2020 price levels? Or do we stay at the 2021 price level, which is where we are more or less at the moment? Again, this depends on a lot of different factors, as mentioned before, but let's say there's a certain risk that sooner or later negative development or surprise will happen, be it in terms of GDP growth, a recession, unemployment, the ongoing conflict in Ukraine, or whatever. And if this happens, I think prices will go down a bit further. But again, I don't think we'll see a pre-2017 price level anytime soon, simply because the overall demand side of things will probably never go back, or at least not in the near future, to where it was pre-2017. And at the same time, Rolex production clearly didn't keep up with that increase in demand. And even if it would at some point, Rolex would know how to manage supply. Now, again, breaking it down a bit more with regards to the different models, what would that mean? I would say that I would expect most precious metal pieces to come back to retail, or maybe even a bit below. This used to be the case in the past, right? I think the Daytona will still go for quite a hefty premium, especially if you look at the upcoming 60th anniversary and what might be introduced at Watches and Wonders this year. And I think the rest of the sports lineup, so the GMT, will also go for a higher premium than the Submariner. And the Submariner will, in my opinion, also have a slight premium over retail. But maybe they just will go at retail or a little bit below. The Explorer 2, Explorer 1, they will go at a slight premium over retail. And yeah, then you will have the various watches that will go below retail anyway. So again, the 28 mil pearl masters or what have you. So it really depends on the model. But again, I think we'll end up somewhere between 2017 and 2021 price level, depending on all those factors that I mentioned before. So I hope this lengthy video makes some sense. Let me know in the comments what you thought of it. Any questions? Let me know if this was helpful. And it's going to be interesting to see where things are going from here. And I'm pretty sure at the end of the year, we'll look back and we'll look at some of the things and we say, we didn't see that one coming. So thanks for your patience, and I see you in the next one.